What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at ARM Holdings, ticker symbol ARM, on a variety of time frames in anticipation of the next trading day, Friday, February 16th. Well, this stock has been an absolute monster as of late. Let's take a closer look here. I'm going to take you guys through all of the relevant time frames that I'm paying incredibly close attention to, starting with the 1 minute for potentially some intraday opportunity, generate from some scalping revenue, right, around a core position. Again, we'll start by briefly taking a look at some intraday opportunity, and then we'll look at the bigger picture, which will be the majority of the video here, okay? You guys get value out of these videos, covering these stocks each and every day. Appreciate you subscribing. Our goal is 1,000 subs here in the next week and a half or so. I think we can do it with your help, so thanks a lot. Let's take a look. So, first of all, just really obvious, this one did offer a very clean setup to the short side here late day. Now, I'm sure a lot of scalpers ended up taking that one, but what I want to show you here in particular is just a textbook breathe and go setup. I actually taught a class on this setup. This is a setup that I developed over time, and it's just one straight out of my playbook. Let me show this to you guys. We saw this big rip. We had previously been respecting this cluster of EMAs. That's fine, right? But this big rip was on big volume intraday here. All right, you zoom in, you can really look at the move. It's a great way to generate some revenue around a core position if you are an active scalper. Okay, you pull away hard from these nothing more than self-fulfilling prophecy psychological EMAs. I'm the first one to tell you that's the way I want it. Pulls away hard, pulls in on lower volume. You see this decreasing volume compared to the pull away. You could build out a position here in this general region approaching that 20 EMA. What I would have done here is you have a relatively tight risk, right, compared to the move. You can risk just below the volume weighted average price if you want. Ideally, I probably would have built out on either this or this candle here. Okay? And then you can rip up a side through. This is the breathe. This is like the setup, right? This is the breathe here and the go. And, if somebody entered a little bit early here on this candle, for example, the volume in hindsight was a little high. Maybe they get chopped out, but that's fine. The risk is so tight that the reward to risk ratio is quite a bit larger than you even would need. Okay, it offers rather significant edge over the long term. So you get chopped out, fine. You can look, does the setup still look good? I re-enter. Okay, it's a good re-enter, by the way, not an emotional re-enter. And then you get that rip upside through, and you get a great, multi-R setup that plays out in your favor. Typically taking profits in tiers, as you see a big pull away, watching the level 2 box and the time and sales, the tape, right, to help you out deciding on how to do that. Okay, but let's move on here. What I want to show you guys is the volume bias. Now, this is more big picture stuff. Okay. Core position stuff. The volume bias on the 5-minute chart. Let's see if we can pull anything out. So clearly the biggest moves on the day going to kind of be this dump off mid to late morning and this pump right in the mid afternoon. Okay, so let's look at volume correlation. You see here a slight increase in volume on that dump off. Okay, but relatively similar to what we were seeing around the name at that time. It was morning. Volume is expected to be higher. But then when you get this pump upside, you see, look at this. Volume shoots up out of the hole. Someone trading off the 5-minute could have, we have just a textbook breathe and go here. Rip upside, breathe, right? Taking a breather on low volume. The stock kind of hangs out, taking a breath as the buyers sort of, you could almost say, reload. All right, load up, tier into a position here, risk very little. And boom, upside, big R potential trade. Okay, great name today. A little bit spready, but that's fine. We just traded with smaller size and wider ratios. By the way, if you guys want to get all these intraday scalp setup alerts, take a look at that first link in the pinned comment. You can go ahead and join Gold Plus UOA, or even Platinum 1-on-1 if you really want to look to try to expedite things. The price of those memberships, it goes up over time. It has consistently for the last 3 years, but you get grandfathered in at whatever price you join at for as long as you retain the membership. Won't raise it on you once you are a current member. But big volume on that pull away. Listen, when a move is in your favor, I don't care what time frame it's on. You want volume to be as high as possible when it's in your favor and as low as possible when the thing is moving against you. Okay, let's take a look now and get really contextual on the 30-minute chart. You see here these self-fulfilling prophecy areas, that 50 period, that 200 period, that 50 period is certainly in play. Currently, we're just about a 3% move away from a test of that. The stock's up 5.76% today. That is certainly in the conversation for a one-day potential test. Listen, from a bullish perspective, if we see a retest of that 50 period here on the 30-minute, bulls are going to want to see that hold. Bears, one thing's on your mind. Break downside through that 50 period, head down toward that 200 period, because really you want to break downside below that 200 period. Okay, bulls, hold the 50, rip upside. Let's take a look at the 4-hour. Now, this one has had such a substantial move lately, okay, that once you start going longer time frame, these moving averages take their time. They get ripped upside. So listen, here on the 4-hour, here's all I'm looking for. If I'm a bull, I want to see this 50 period getting ripped upside as quickly as possible, get some feet up underneath the stock as quickly as possible, a psychological potential level of support, because why not? Ideally, as many psychological areas as possible that help you out potentially in your favor. And if you're a bear, really you want to see this 50 period hanging out down as low as possible, as long as possible, to give some other bears an excuse to talk about this, this difference here, this kind of gap, so to speak. All right, the most important chart now. Let's take a look. This is the daily. Okay, this is going to be the most heavily watched, by funds, institutions, which, there's clearly some institutional interest on this name. You have the SoftBank situation. They own 90% of outstanding shares. That lockup expires in March. But there's really no guarantee they're even going to sell. I mean, look at the Alibaba situation. But institutions are watching this daily chart. Here's what I'm looking at. Really nothing's out of the question here on ARM. The thing has been so volatile that we have to start talking big levels. I mean, look, if I'm a bull, sure, I don't want to give up 130, ideally. But really, I have my sights set on 150. It's a 12.5% move away, but we've seen crazier things out of ARM here. All right? My sights are set on 150. Hold 130, just move up toward 150. 140 is great. That's a great claim, but 150 is the real claim. That's a huge psychological level. That's the thing to talk about, I think, here in the near term. If you're a bull, if you're a bear, break downside through 130. And a downside break of 120 if you're a bear would be highly encouraging to a lot of bears, and I think pretty discouraging to a lot of bulls, which if you're a bear, that's your goal, to psychologically get under the enemy's skin, right? Really important. Listen, I know that some of you bulls out there are like, why are you giving the bearish side? And some of you bears are like, quit talking bullish. You have to understand the psychology of the enemy. The market doesn't care if you feel good. The market is here to, in a very literal way, at risk of sounding dramatic or corny, it will either make you quite wealthy or take your last dollar, not even have the common decency to turn around and say thank you for your contribution, and it will kick you out of the door in 2 weeks. It does not care. Either way, by the way, which is exactly how you want it, and that's the exact reason why you're here. Okay? Let's take a look now at the implied volatility really quickly. So you can see here it is slightly elevated. So if you own options, just understand that there is a slightly elevated risk of potential IV crush in the future if we see this return back toward a more equilibrium state. Okay. And let's finish up here by taking a look at the bias in the options chain. What are the options traders telling us here today? Well, look here, great sample size actually, quite a bit of volume here in the chain today. 337,000 total contracts traded, 233,000 of those were calls, 104,000 of those were puts. We're getting pretty heavy call lean today, bullish lean, all right? Short-term speculators. How do we know time frame? Look at the delta ranges, 0 to 20. Those are those cheapy, typically, out of the money, right? Gambly style, speculative contracts, 85,000 calls, 53,000 puts, bullish lean in the short term. All right, and you go out to the really every time frame here, every delta range is seeing call bias. Okay, as always around here, the important part is staying in the game. Don't get knocked out, manage your risk. Of course, the options traders, they can be wrong. Listen, if you have value out of this video and you want me to keep covering ARM, let me know in the comments section. That feedback does help out tremendously if this is a name you'd like to continue to see covered here on the channel. By the way, it is a brand new channel. Our goal is 1,000 subs in the next 10 days or so. I think we can do that with your help. So if you wouldn't mind, if you got value, hit the subscribe button, and I'll see you in the next one.